I mean, there are like a number of ethical questions that come up when you're dealing with vendors directly, and a lot of the kind of investment world don't realise that that's dealing with super sensitive situations, because there's a reason why people need to sell quickly.
Co-founder of Property Solvers and one of the UK's sharpest minds in fast property buying and auctions.
You buy a property below market value. Typically at that point you were buying them at around 80% below market value. Getting a bridging loan on that day one, so you're effectively getting a bridging loan for the purchase price, and then you complete the day after with a mortgage company, so you're refinancing up to that. At that point it was like 85%, 90% loan to value, and then oddly you were getting your money back, and that's what I couldn't quite get my head around until I did it. But there have been a couple of what we call lemons, where you kind of you buy them and you're like, okay, we didn't realize that was going to happen. We're always buying cash because we're cash buyers and we're a cash buying company, so as long as the legal pack's done, we can get them listed in about a week. The modern method of auction, there'll be no fees to the seller. So the seller thinks, okay, I'm getting a great deal here. But the downside is that the buyer gets charged like 5%. Sellers don't realise that that's going to affect what people are willing to bid on the property. It reel you in with like no fees, but a false promise.
It's the worst piece of advice you've ever received.
Oh God, worst piece of advice.
Before we get into the episode, I just wanted to say that Property People has been going for over 5 years, and I've come to know that over 71% of you still haven't hit that subscribe button. So please, I ask a small favor. If you could take a moment and hit that subscribe button, I'd be ever so grateful. And in return, I assure you that I will do everything in my power to make this podcast and YouTube channel the best it could possibly be. We get bigger and better guests, and we'll go more places together. Now, back to the episode. Hello, everybody, and welcome back to another episode of Property People. Today, I'm delighted to be joined by Mr. Ruban Selvanayagam.
Hi, Sam. How you doing?
Very good, thanks. How are you today?
Yeah, I'm good, thanks. Thanks for having me.
Good. Right, we've got a very exciting episode ahead of us, because you are a property trader and auctioneer as well. You've kind of moved into that space. And so there's lots of stuff to go into. I'm going to do a quick little intro for you.
Sure.
You're the co-founder of Property Solvers and one of the UK's sharpest minds in fast property buying and auctions. Mm-hmm. From early buy-to-lets, you've become an award-winning trader, and you've built a reputation for solving complex deals. You've done very well, getting accolades for the kind of work that you've been doing. And before we go through all of that stuff, I would like to start at the beginning of your career.
Right.
And a little bit earlier, perhaps, and the kind of person that you were at school. Were you did you enjoy going to school? Did you look forward to going to school? Or could you not wait to get out of there?
No, I did enjoy school, actually. I moved to quite a few schools, between different schools when I was a kid up to age 11. I went to about I went to primary school, then I went to middle school, and then I went back to primary school, which is a bit weird. But yeah, I enjoyed school. I was
back to primary school?
Yeah, so it was in a different borough. You know, like some areas they have like primary school, then middle school.
Oh, okay.
And then you do middle school till you're like 14 or something like that. But then my parents split up, so I ended up going back to primary school. But yeah, I wasn't particularly great at school, but I worked quite hard. So I managed to get through past the 11 plus by the skin of my teeth. So I got into grammar school.
Okay.
And there I was pretty much a mediocre student. I wasn't, a boffin as they called it back then. I got by. But overall, I was pretty studious, worked quite hard. I mean, I had my moments like adolescence. You kind of doss about a bit, but my mum was always quite strict with me. Not in a an evil way. She just always wanted the best for me.
Disciplined.
Yeah, very disciplined. And when I hit 14, I was mucking around at school, and I remember coming back from some parents' evening and getting the bollocking of my life, and then I just kind of like put my head down after that. And yeah, overall I enjoyed school. I worked quite hard. There were quite a few people in my year group who seemed to be able to just not do much work and still do quite well in GCSEs and A levels, but I was always one of those people that had to really kind of put the effort into.
There's
get
some
decent
people in
grades.
life that like the photographic memory. They like do nothing. You know that they've been out the
They're
night
so
before,
annoying.
like to 9 o'clock at the park and stuff, and the next day they just smash it.
Yeah,
And
it's weird. And you wonder where does this all come from? Like, how did you do it? But so I always had to kind of work quite hard to get the grades I did. I mean, I didn't do amazingly well in my GCSEs and A levels, but I did enough to to go to uni and that kind of thing.
What did you study at A level?
A level, I did English language, French, and economics. Yeah.
Okay, economics is helpful. English language is very helpful.
Yeah. French was I've forgotten most of it now, but I enjoyed it actually. Yeah, I did. I did a bit of a trip abroad in my lowest sixth, I think it was. So yeah, it was great. It was
Do you
great.
still holiday in France a lot?
I haven't been to France for a long time actually.
Do you speak French?
Un peu. But don't. Yeah, let's not go.
Let's not go down that route.
Yeah.
Tell me about what you decided to do at university.
I did a law degree at uni, so it was never really my plan to be a lawyer, and obviously I'm not a lawyer now. But
that's really good, though. Somebody once told me the smartest people in the world are lawyers or people that have done law degrees.
Oh, really? Yeah. Well, yeah, that's probably questionable, but yeah. I mean, it was one of those subjects. My sister was doing it. She's about 4 years older than me. And I wasn't really sure what I wanted to do at uni, and had some great teachers at the school I went to who were just kind of saying, look, if you do law, it's one of those subjects that even if you don't become a lawyer, it's well respected in the world of work. So I kind of thought to myself, well, I'll do this degree and see how I do. Maybe I will become a lawyer, and we'll talk about why I didn't become a lawyer afterwards. But my sister went on to become a criminal barrister, and she was trying to urge me to go into that area. But I just wasn't into it, But I didn't mind the degree too much. It was quite a hard degree to get through, but I think it was quite a challenge at the same time. And I think it's kind of put me in quite a good position as as I've grown older.
Yeah, exactly. I mean, criminal barrister as well. I mean, she was urging you to go into. I always think that there's two types of things that I personally always stay away from. One of them is anything to do with medicine and medical stuff and surgery and stuff. I just don't want to be like looking inside of people's bodies and teeth and stuff. Yeah. And then the other one is in crime as well, like constantly involved in some sort of like drama of sorts.
Yeah, I mean, she keeps it to herself for confidentiality reasons.
Sure.
What goes on in her day to day, but I think
imagine.
she really enjoys it. But
really?
I think she was always supposed to be a lawyer. Like even when she was a kid, you can never win an argument against her, so she was born to be the lawyer, so.
And it's interesting how some people do generally have this kind of vocational thing. I think I was born to be in property for some reason.
Yeah, it's a weird one because, when I was 18 or 19, if someone told me you'd be doing property buying and that kind of thing, I'd be like, nah, it doesn't make any sense to me. I always thought I would go through some kind of corporate route or something like that. Okay. And then as you get older, things change, I don't know what it is, but yeah.
So tell us about that. So you're doing the law thing.
Yeah.
Your sister's probably telling you to do one thing. Did you have any pressure or suggestion from your folks to do one thing?
Yeah, my mum wanted me to be a lawyer as well. She probably still does. I think she's still. There's still probably not a month that goes past where she doesn't mention it. So, but I think that ship sailed now. She wanted me to be a lawyer, and as I went through the law degree, I think there's a statistic that only about 30% of people who do a law degree end up being lawyers or solicitors or barristers, So I kind of thought to myself, this is not what I want to do. And I was doing some placements at the time, so going to work with law firms, and I was just like, I don't know if I want to be working in this kind of environment. And, when you're young, you kind of think to yourself, I don't know what you want to be doing. You want to be traveling, and you have these ideas in your own mind. But I was pretty sure I didn't want to be a lawyer close to the point of graduation. So I finished uni, and I was just doing any kind of job really to just save money. So I was temping, I was working in bars, restaurants and all that kind of thing. Saved up some money and went to Australia. Did some traveling. Did a working holiday visa thing in Australia. And I was actually working for a few law firms there, getting paid quite well. And then that really kind of confirmed that I didn't want to be a lawyer working there, even though the money was good. I just thought to myself, no, I don't want to do this. And it gave me a great opportunity to kind of travel as well. So I saw a lot of Australia. On the way back, I went through Southeast Asia because I've got family in Malaysia as well. So I spent some time with them. So I really got to see that part of the world, like firsthand. which was great. Came back kind of thinking, right, what am I going to do now? And I don't know what was going on in my mind at the time, but I decided to do a broadcast journalism course at Birkbeck College in London. And I thought to myself, right, okay, let me see if I can like get into it. And I did get into it. And I started out by doing internships at the likes of LBC, BBC 5 Live. And then I was getting kind of freelance work doing that. And I thought that was my career path. It's quite random how it happened.
Doing what specifically there, though?
Producing, like radio producing. So I was working with a lot of the kind of presenters and things like that, putting together news stories, discussions. LBC is very kind of talk radio. I was doing a lot of the late night shifts, like the kind of where you got a lot of weirdos calling up and stuff like that, and dealing with all that. So yeah, it was fun. It was fun, but I found it to be a little bit repetitive after a while. So I was doing that for about 2 or 3 years. And then after a while, I was like, I'm not sure if this is what I want to be doing for the rest of my life. And I remember having a conversation with a senior producer at the BBC. And she'd been doing it for about 10 years. And she told me about the salary and what kind of work was involved. And I was like, I don't know if I want to be doing this. When you're that age, you're kind of you're kind of hot-footing between, what you want to do and what you don't want to do. And just to go back a little bit, when I was in my first week of uni, I met James Durr, who's my business partner now. Okay. So I've known him since I was 18. And there's a group of us, we're all really good mates still. And he was, at the time when I was working at, these different placements, he was doing a lot of, he started working in the whole kind of quick sale space. So he was like in his early 20s and he bought an auction property. So I kind of got intrigued by what he was doing.
Right.
And at that time, this is like going back to over 20 years ago, there wasn't as much kind of networking and property events and forums like there are now.
Yeah, absolutely.
But there was one, I don't know if you remember it, called Singing Pig. It was
before 2008, 2010, I had zero idea that any of this stuff ever existed.
Yeah, so that was kind of the first kind of property forum that existed, that I knew of anyway. It was like when the internet was like kind of growing. So it was where a lot of kind of property guys were going on and talking amongst themselves. So he introduced me to that website. And I was always a lurker. I was never really participating because I was just kind of reading about what the other people were doing. But then after he bought his first auction property, he joined an organization called the Quick Sale. And they were one of the first BMV companies. And they operated on a kind of franchise basis. And what they were doing was just buying properties below market value. That's essentially what they were doing, offering people quick sale solutions.
Yeah, we buy any home.
We buy any home type thing. And what we're doing at Property Solvers here now, essentially. The difference back then was that the finance market was just crazy. It was really loose and free. I was able to get a mortgage. I mean, I didn't buy my first property till about 2006, but he was telling me about these deals that he was doing. And I was like, this doesn't make any sense whatsoever because it was such a different environment to what we're operating in now. And if you look back, it's quite crazy. So have you ever heard of like day one remortgages and that kind of thing?
Yeah, of course, absolutely.
Yeah, so that was what was being done.
But just for anybody that doesn't know, what is a day one remortgage?
Okay, so the idea was you buy a property, let's say below market value. Typically at that point, you were buying them at around 80% below market value. You're getting a bridging loan on that day one. So you're effectively getting a bridging loan for the purchase price. And then the day after, so I think it was just the day after you exchange contracts with the bridging loan, and then you complete the day after with a mortgage company. So you're refinancing up to that. At that point, it was like 85%, 90% loan to value. And then oddly, you were getting your money back. So that 5% difference you were actually getting back. And that's what I couldn't quite get my head around until I did it. So there were a bunch of people doing it at that time, So back in those days,
the self-certified mortgages.
Yeah, it was crazy. I mean, I managed to get a mortgage even though I was earning okay, but I was kind of freelancing really. I didn't have like a regular job. I was working between here, there and everywhere, and I managed to get a mortgage quite easily, and I was surprised at that myself, to be honest. So James was part of this organization, and at that point, because so many people were doing it, it was a franchise kind of setup. So all the people that were doing it were all kind of operating in different areas. So there were no areas left for me. So I kind of went off on myself and did it independently up in Derbyshire, just buying these properties. So
is that where did you grow up?
I grew up in Sutton, but it didn't really work in London because most people weren't really willing to accept those kind of offers.
Right, sure.
You could do it if you're willing to put a bit of money in, but I was kind of in my mid-20s and didn't really have that much money. So, I mean, my original plan was just to source property as a bit of a side hustle. But then I saw people doing this and I was like, oh, maybe I can tap into that. And then it just kind of snowballed after that, really. So, he was doing that and I started doing it independently. I wasn't as aggressive as a lot of the guys that were doing it at the time. There were people doing 20, 30 of these every month. And what it was an initiative called Sell and Rent Back. So effectively what you were doing is a lot of the people that you were dealing with were people that were facing repossession, because this was just before the financial crisis. So, interest rates were going up quite high. So a lot of people were in kind of dire situations. So
negative equity.
Well, it wouldn't work if they were in negative equity. But you were sometimes able to negotiate with second charge lenders and bring that loan down in order to prevent them from getting repossessed.
But it was effectively that they couldn't keep up with the repayments. So This episode is sponsored by Merry Oaks Property Finance. Merry Oaks Property Finance is a finance brokerage, and we specialize in property finance for investors, developers, landlords. So anything from buy-to-let, bridging, development, commercial, HMO, short lets, hotels, the whole 9 yards. We can support you on whatever funding requirement that you need. If you have a funding requirement, please do reach out to us in the show notes, and I hope to hear from you soon. Now, back to the episode.
Yeah, and their repayments were getting high because they were with these kind of subprime lenders that were charging, 7-8% at that time. So they were just struggling, So you would go in there and kind of say, look, I'll be able to buy your property for this amount and then rent it back to you indefinitely. So that's what the strategy was back then. And if you went back to networking events, I mean, there were guys like Ranjan that were operating back in those days, Vanish Patel. Who else did I used to meet back then? A guy called Palmdeep Vadesha. I don't know if you remember him.
No.
Tycoon Forum. He's a really good guy, actually. You don't hear much about him, really, but he's a really, really knowledgeable guy. So I remember speaking to him a few times because I was doing it for a bit. And I was kind of like, God, what am I doing here? And I wasn't really getting the deals. And he gave me a bit of a pep talk and, got me back into it. So I do have to thank him. So yeah, it was going on for a few years, that was. And then the financial crisis hit. So, and that time as well, I bought a property with James. And that was the first deal we did together. And it was a kind of a larger house in northwest London. We managed to get it on like a 90% mortgage, which is crazy, really, when you think about it. And obviously stamp duty wasn't that high then. So the actual entry costs weren't that bad.
And the price was a lot lower than it would have been
today.
And
the price was a lot lower, yeah. So we bought that and then we rented out. We both lived there and we rented out a couple of rooms to friends as well. So we were doing that for a little while. And then the financial crisis started to hit. And I wasn't as aggressive as a lot of people that were operating in that time. But I remember thinking to myself, oh God, I could be in a lot of trouble here, because I was going into that period quite highly geared. Right, and the interest rates I was paying were like in 5-6%. And, there was a period where nobody was sure whether they were going to drop the base rate or not. So I was kind of crapping myself for a good few months, thinking to myself, right, what am I going to do? And I remember I kind of paused the buying because I was like thinking to myself, I'm just not going to do anything here and just wait and see what happens. If I have to get a second and third job, I will, and just to kind of fight through it. But then they dropped the rates. But I think a lot of people at that time carried on buying to almost kind of keep the business self-sustaining. And those are the ones that faced, a bit of trouble during that time. So, that organisation, the Quick Sale, I think they disbanded like shortly after that period. It was just a funny time, really, because we were all very lucky that the base rate went down, because it meant that we were able to cash flow these properties. The London one, we were barely covering. We were obviously kind of chipping in for the mortgages ourselves and then getting a bit of rent, but it was really kind of the stress testing wasn't great, but once the base rate dropped, it kind of everyone was kind of worried still, but
it gave you some breathing room.
Yeah, it was kind of like, okay, well, what do we, we can just kind of like figure out what to do now.
And because not many people were buying, did you find also that rents started to increase a little bit?
No, they didn't, because a lot of people still were struggling at that time.
Right, like so affordability is...
Yeah, a lot of people were still, there were, some conversations to be had with tenants, and the problem was that because you were buying these sell and rent back deals from people who formerly had, issues, there were some issues there with getting rent.
And you get the rent back, so did you offer them for the rest of their life the same rent? Or
yeah, no. I managed to keep them like reasonably low for quite a few years.
Yeah.
But then I had to kind of increase them. I've always, when I was agreeing these deals, because I would always meet them face to face and kind of say, look, I'll be happy to rent this property back to you for for however long you want to stay in the property. So I've still got rent backs now.
Right.
I ideally would like to sell them, but I wouldn't do that because I kind of made a promise to them
exactly.
back in those days. So the rents have gone up, but that was mainly in response to Section 24 and recent
and a whole bunch of other stuff.
Yeah, but there was a time when, because the base rates were low, so all of these mortgages were on trackers, so you're able to kind of cover your costs and things like that. And another good thing with rent backs was that it was already their home. So they're kind of looking after it like it's their own property. So, your maintenance costs and things like that. Obviously you have to replace boilers and that kind of thing. But, they respect the home. When you sometimes they do move out for whatever reason. The houses aren't in that bad nick, So.
And again, so you're doing this mostly in Derby as opposed to in and around London?
Yeah, so Derbyshire, Nottinghamshire, Sheffield, like those kind of areas I was doing it in, because London I just found it a real struggle. So that's.
And then you building up a little portfolio using these finance tools that are available to everybody.
Yeah, so they stopped though.
They
well, the whole sell and rent back thing stopped in around 2007, I think it was. It's a couple of reasons. I think the main one was that people weren't able to get those finance deals. Like the day one bridge just basically died, and all the lenders just basically said, look, we're not doing this anymore. There was only a couple of lenders. One was Mortgage Express. They were the main ones that were doing it. They were the buy-to-let arm of Bradford and Bingley. But the other mainstream lenders that are still around were doing it as well, but just not as much as Mortgage Express.
So what was the shift then going into kind of more of the property trading? Because is it that you always hang on to everything, or if you didn't do this rent back and it was an empty property and you just got a good price on it below market value, would you then flip it into an auction?
No, I was always retaining the properties, and that was always my goal. It was really like Section 24 that kind of forced me into, the kind of selling mode. Really, I wasn't really up for selling.
And Section 24, for those that don't know.
Basically, the inability to offset your mortgage interest apart from a 20% credit that you get.
And that was around 2015, right?
2015, but they spent about 3-4 years rolling it out.
Yeah, that's right. Actually, so, they did increments as well.
Yeah, so there was a little while where you had a bit of breathing space, but ultimately it meant that your tax bills just went crazy. So a lot of people were forced to sell. Amongst other reasons,
and because you bought them in your personal name.
Yeah, they all bought in my personal name.
I've got 2 right now in my personal name that I'm looking to sell because it's just getting smashed.
Yeah, that's the thing. And you only realise it when you get the bill through, right?
Exactly.
You're like, oh god, okay, I need to do something about this. It went on for a little while. I worked with good accountants who were kind of like forecasting what my tax bill would be down the line.
Yeah.
And I was like, okay, I need to start selling, but I never really wanted to sell. It was always my game plan to kind of hold on to these properties.
But then you could take the winnings. Was there some capital growth in some of those properties?
Yeah, it took a while for them to kind of get going again. London when did really well. Even a couple of years after, probably 2011, 2012, London started doing quite well. So that property we had in London did really well for us, but the others took a while. And I'd argue that some of them, the capital growth didn't really happen until like the late teens, like 2018, 2019 is when we only started seeing it. So I had these properties for like 10 years before they actually started doing quite well. But yeah, they've done okay. They've done okay. But another issue is I was talking about the day one refinance, because you're your capital gains tax bill is based on the original purchase price. That's quite a shocker of a bill when that comes through.
It gets quite chunky, doesn't it?
Yeah, it's quite chunky. So, but yeah, so I haven't sold them all, but yeah, it's.
Have you ever looked into the court? Because some people talk about corporatizing the portfolio.
I did.
Have you looked into that?
Yeah, I spoke to those guys who I think are in a bit of trouble now. I won't say their name because why do that? But yeah, about incorporating, and I can't remember how it worked, to be honest. But they were charging quite a lot, and I was thinking to myself, well, maybe I need to start thinking about property as a bit more of a business anyway.
Right.
So building a portfolio in a company name, in a company structure is probably a good idea.
It's probably
anyway,
the right way forward.
So long term, I think it was probably the right thing to do anyway. And
I mean, you take it out of your personal name, you pay your taxes. Unfortunately, it is what it is. The only guarantee in life is death and taxes.
Yeah.
And then you can start buying again, but in a company name.
That's it. Yeah. So that's been the strategy really. So
Right.
I know. We won the Property Trader of the Year, but we do all kinds of things really. So we're landlords at heart really. So we are interested in kind of buy to let and building up our portfolios as well. So the trading side of things came on the back of that because we were kind of coming across some of these properties where we were like, well, it's quite a good idea to trade them on. We have been doing flips as well.
Yeah.
So flipping has become a lot harder in recent years, but because of the cost increases, but we were doing a lot of flips back then where we would buy properties at a good price and then spend a decent amount of money on the refurb and then resell. And then we got into the trading pretty much around COVID time. Really, that's when we started doing that a bit more, but still building up the portfolio as well. So yeah.
So going into the trading thing is relatively, out of all the stuff that you've done, is more recent. Just to go back to when you had those properties and the interest rates were high, but then fell to the base rate fell through the floor.
Yeah.
Were you paying down when you like the loans, or what were you doing with the surplus cash that you had?
I did a bit. On a few of the properties.
Because there's two different types of wisdom I find, which is always confusing. Some people are like, oh, you got to kind of preserve that cash flow and then just like compound it, go buy again. And there's other people that say like, oh, you should really pay down to a reasonable LTV and stuff.
Yeah, I think it was quite sensible, and I learnt my lesson because I was incredibly lucky to be able to get through that period, 2008, 2009. And as I mentioned, I went into it with, quite highly geared. So I thought to myself, right, if another crash happens, I don't want to be in that position. Because you don't know what's going to happen. They might not be able to drop the base rate again, to that level. So I've always kind of thought to myself, right, go into these deals and like try and gear yourself as lowly as possible.
Yeah, it's sensible. They say that the right gearing is 100 minus your age.
Right. Okay. Right. That makes sense. Yeah.
So if you're in your 20s, go for the 80% and stuff. That's okay. But by the time you start getting into your 50s, you want to be kind of like at 50%, a bit more comfortable.
And I think diversifying as well. That's why trading is a great strategy if you can get it to work at scale. But trying to deploy different strategies within property is quite a good idea as well. You're kind of hedging against the different risks that can come.
Well, this is interesting as well. Yeah. So the different strategies. So you mentioned, obviously they've got flips and stuff, but then what about more creative stuff like assisted sales or lease options? Have you ever done any of that fancy stuff?
Yeah, I've done a bit, but I've always found it quite hard to negotiate with sellers, those kind of things. Like most sellers that come up to us just want a straight sale. They don't really want to mess around. They're just like, look, can you just buy my property? I don't want this. I don't want this faffing around with you paying my mortgage off or you covering my bills and stuff like that. So we have done it a couple of times. We did it maybe about a year and a half ago.
Which was the assisted sale lease option?
Yeah, it was a bit of an assisted sale, like a delayed exchange of completion. It worked out quite well, but that's because the seller didn't have enough equity. And we made a decent level of profit on it, but. The seller was kind of a little bit more savvy. I think he'd done quite a bit of property already.
Right. Yeah.
So he kind of knew what was going on. But most sellers that we speak to are just like, look, can you just buy this thing quickly? I just want a shot of it, so yeah.
And so that's basically taking you back to somewhat of your roots, or at least James's roots, of being in that fast-paced, we buy any house type environment. And then so tell us a bit how the mechanics of that business and how you decided around COVID that that's the thing that you were going to do.
Yeah, I mean, because we've always been kind of the buying properties below market value. That's what we've always done. So we've just kind of adapted our strategy depending on where the market is, really. So, we've always thought that the direct to vendor approach is the best way to go, really, because you have that conversation. You haven't got the interference of an estate agent, worried about their commission. You can really find out what's going on with the seller and come to a solution. So, I've always dealt with sellers, even when I was first, starting out. It was always kind of, right, I'm speaking to the seller about what they want and what they want to achieve. So Property Solvers was really kind of born on the back of that. And our overall aim was to just generate leads from people that want to sell quickly. So when we kind of resurrected we set up Property Solvers actually around 2006, but it didn't really do that much for a little while. And we just kind of kept it there, filed our company's house returns. And we only really got it going in around 2016, 2017.
Oh, is it? So you've had Property Solvers since 2000?
For a while, yeah, but it just wasn't doing anything really. So, so then we only got it going kind of, 2016, 2017 is when we were doing it. So in between that period, I was just kind of running the portfolio really, did a bit of traveling, that kind of thing, and came back, and then I was like, right, okay, I want to get back into this property thing. And that's one of the regrets I had actually, because I wish I was maybe doing a few more creative deals during that kind of period, like post crash. So I think that was a good opportunity to do it,
Yeah, I mean, I took my foot off the gas certainly around that time, and I lived abroad actually. I ended up living in Hong Kong for 5 years.
Wow.
So
that's a good experience.
It was a great experience, and it's kind of built me to where I am today in many ways. And I don't look back in any way with kind of like regrets of I should have done more with more exciting things, and so from that side. But at the same time, I do think bloody hell, if I had just doubled down at that time, I'd probably be a lot wealthier than I am
that's
today.
the thing, right? But hindsight's always 20/20, right? You guys kind of think to yourself, I should have done this, should have done that, but maybe it's just the paths we're supposed to
exactly
follow.
I think I'm on the right path. And when it comes to the property trading, you go direct to the vendors, you speak to them. I mean, what are those conversations like? I remember, do you know the girl we mentioned vanishing, these guys, Susanna Cole?
Yeah.
So she said that she doesn't like going directly to the vendors because she's always like ends up heartbreaking because these people are going through some strife, and you're always like listening to some sort of, I don't want to say sob story because it sounds like it's not serious, but they are genuinely going through some sort of problem that needs to be solved. So how do you feel about all of that? How do you handle it with care? Yeah,
I mean, there are like a number of ethical questions that come up when you're dealing with vendors directly, and a lot of the kind of investment world don't realise that's you're dealing with super sensitive situations, because there's a reason why people need to sell quickly. Most cases it's financial. Other times they just want rid. They've inherited a property, so they're all going through situations that none of us like, so you've got to be super sensitive about that. And the way we've always approached it is just have a conversation with them, and always try and guide them in the right way. Even if we see there's plenty of equity there, if we see that they've got another option, we wouldn't be like trying to force them into the quick sell route, because that just isn't right, So sellers call us. We always start by asking, what their situation is, why are they looking to sell? In most cases, people are contacting us because they've had their property on the market for 3 months with the estate agent. The estate agent's probably not very good, overpriced it in the first place. So we just quickly go on Rightmove and just say, well, land registry data is kind of showing us that your property's worth, let's say, 200. If we look at other properties, comparable properties, that's what your property's probably worth. But you've got it listed for like 230, 240. So that's probably the reason why you're not selling it. And sometimes it's, they don't, some sellers don't want to hear that, but
those are the overpriced ones.
Yeah. So,
but then what you're trying to do is get them to 200 and then below that, right?
Yeah, exactly. So sometimes it's just
it's like that's a big gulf.
Yeah, exactly, because they've got it in their mind that their property is worth
£1 million. Is usually the magic number there.
Yeah. And I get why estate agents do it, but they're not doing the industry any favors. They're competing amongst themselves. They're competing not only amongst themselves, but also with the online operators as well. And the likes of Purple Bricks, they're just
They're listing
valuations are
agents.
just-
they just because they just want the listing. They get paid up front.
listing. Yeah,
So they're like a listing agent. They just get
That's
paid
right.
to put the property on the market, and then it's like good luck.
Yeah,
Whereas-
they're doing auctions as well. I think Purple Bricks.
I think they've tried literally everything from here to Australia and back.
That's right.
Just trying to make some money.
Yeah.
So you're sitting with them. So managing these expectations of these people that are in some form of distress. They do need the money quickly. How do you win their confidence in that? Because do they think it's a scam? Do you ever get those kinds of comments?
Oh yeah. We've had phones put down on us all the time. It's fairly regular occurrence. But we've learned to kind of just say, look, we know we're not the right option for you. If it comes down to it, we're not going to make an offer on a property where we know
they've got other options.
They've got other options. All they need to do is just adjust the asking price.
Right.
So I jump on the phones every so often, and I just kind of say, look, all you need to do is speak to your estate agent and just say, look, what are you doing here? If I was in your shoes, I would just drop the price to this, and I think you're going to find that you're going to get plenty of people coming through the door, because most people, it's their house is their pride and joy.
Yeah.
So you get a bit protective about it. And when the estate agent tells you, okay, I think your house is worth X, it's hard to get that figure out. And I've been through it myself.
Me too. And then because you spend that money as well, that 30 grand extra that we talked about, he's already gone on holiday. He's already given that one. He's already promised that person that he's going to do this.
Yeah.
Suddenly at 200 grand, I can't do all that. And so I can't move.
That's the thing. And then I've got to pay. If it's a buy-to-let landlord or whatever, they've got to pay taxes on it and that kind of thing.
Yeah, exactly.
And you'd be surprised, because we speak to a lot of landlords, and quite a few of them have bought in like the last kind of 6-7 years pre-COVID, and the capital gains haven't been that much.
Yeah.
Especially once they have to pay tax and stuff like that, they're not actually pulling out a huge amount of money. So a lot of them are kind of debating whether to just retain them. But then you've got all these other issues happening in the buy-to-let world. Some awkward conversations, and I think the fact that we've been doing it for so long, we've kind of lived through quite a few different cycles and eras of property. So we can kind of have conversations with them that other agents, even auctioneers won't be able to have, because we've been through it ourselves. I mean, we sold that London property, and it was before we had our own estate agent, and we listed it with Foxtons. And the guy came over.
Foxtons is a good agent to list.
Yeah. He said, I definitely think you'll get over $1 million for this. Definitely.
I told you.
Definitely. And then we got $850 for it, which was still a good result for it, but it wasn't, the market just taught us a lesson over the course of like 5 or 6 months.
So you chose Foxtons.
We chose Foxtons.
So they charge the most as well. They're like 2.5%, but we'll get you the best price. They say
3%. Yeah, but they justified it by the fact that they said they'll be able to get us more money. So
that was the spiel.
They reeled us in really well. Did a great job. And they're actually like,
they're very good agents. And obviously they're doing something right. I always say I love buying from Foxtons because they're just really on point. They're really professional. Right. They're really motivated to get that sale done.
Yeah,
for
they
you.
are.
They work hard for the deal. They work long hours. But the reason why I started out my career as a estate agent.
Oh right.
And I know that I could probably get just as good a result as any other agent for a cheaper price. Let's say 1.5% is a pretty good going rate for what you should be paying. But I do like Foxtons. I'm not gonna shit on them totally. Yeah. But the demographic of these people that because you mentioned like what motivates them. One of them is usually some sort of financial distress. Yeah. Another one that comes to my mind that I can imagine is maybe some sort of marital issue that they've got. They just want to you know what, man, it's already been a headache. I want to get out of this thing. Yeah. In terms of, is there a general demographic? Because I do know of a story actually up in the northeast where somebody inherited a younger guy had inherited this thing. He was a bit of a junkie, and he had some debts to pay off. So he basically just sold it literally at 50% of what the property was worth. Yeah. So do you find that there is a general demographic? Are they older, in their 40s, 50s, 60s, 20s?
It depends. I mean, it's all kind of related to where you are in the country as well. Right. So in like the Midlands and the North, we get all kinds of people that are looking to sell. A lot of the time it's people that are that have inherited properties. So they might be based in the southeast, and then they've got a property in the Midlands that they've inherited from their grandmother, and they just don't want the hassle of finding an estate agent. They just want rid. They've just got probate through, and they're just like, right, just
give me the money next week.
Yeah, I just want to sell this thing. So above all, we always have the conversation and kind of base it on what your ideal outcome is and whether price is more important than speed. Right. So we would ask them, like, when do you actually want to sell this property? If you were to give us an ideal date of when you wanted to dispose of this property, what would that be? And if they say, look, I need to sell it in 2 weeks, we're like, right, we can do that. But the trade-off is that our purchase price is going to be lower. So if you want to get more money, we can put it through our auction. At the moment, we're pricing auction properties roughly around 85 to 90% of the market value. But if you've got a decent amount of time, and you want to maximize the price, then stay with the agent. We're not going to try and discourage you from that, because that's the best way to get the most amount of money. So I think the key is to be honest with people. We are quick cash buyers, but in order to get that, you're going to have to compromise on the price. And if you want to do that, fine, we can get things done. We are genuine cash buyers, but if you've got a bit more time, then by all means. I've sold stuff myself, and it's always been through the estate agency route, because I know that's the best way to get the most amount of money. It's a pain. You're going to have to deal with potential fall throughs. Especially at the moment, fall through rates seem to be going up.
Oh man,
mortgage issues, and like when I first started, mortgages were so really easy to get, and then then you had the mortgage market review in 2014, and then things started to change, and it's just so many hoops to jump through. So it is a lot tougher to kind of jump, to get through all of that, but you're ultimately going to get the most amount of money. So we have those conversations with people, and we do have an estate agency service as well. So if someone's not happy with their agent, we can.
You can go through the kind of longer form, or you've got the auction, which is somewhere in the middle.
Auction, yeah.
So you got different solutions depending on what they're looking at.
Yeah. So the estate agent. Most of our business is done through the auction and the cash sales, but the estate agent, we always kind of say to people, look, you need to price this a bit more realistically. And as we said before, it's sometimes a bitter pill to swallow for people, But most cases, we'll just say, look, just stay with the agent and just speak to the manager, see what can be done here, because something's not right here. If you're only having 2 viewings in the space of 3 months,
that's it.
Comes down to price.
Exactly. I think that's always from my estate agency days, is if we're not getting any inquiries, the price is definitely too high.
Yeah.
If you're getting loads of viewings through, but it's still not selling, okay, it might be something else to do with the property, or the curb appeal or something. Next door neighbours got an overgrown
there
garden.
are those issues as well.
Sorts of things can be
structural issues.
But if people are coming to have a look at the property, you should be okay. But if you're not getting any viewings at all or inquiries, then it's definitely to do with the price at the very least.
Yeah.
Will you look at any kind of property in any condition, or does it need to be?
Yeah, absolutely. Yeah.
So it could be dilapidated. It could be.
Yeah, those are the ones that generally we tend to do, because those are the ones where the sellers are usually just like, I don't want to take this on. So
and you can't sell that through an estate agent.
Yeah, it's
anyway.
very difficult. So the majority of properties you do buy need work of some sort. That makes the offers unpalatable for some, but most people understand that as a cash buying company, you need to make a margin. You're not going to take on that property and just spend the amount it costs to refurb it, and then it's still worth. There's not much in it for you. They understand that. So you're able to kind of work with those properties.
Then once you get the property, you secure it. Is your intention always to retain and add it to your portfolio, or can you trade it back into an auction and flip it straight out? Or?
It depends. It depends on the property. Sometimes more recently we've been retaining quite a lot of properties, because our logic at the moment is that trading has become a lot harder in the last couple of years.
To make a margin to keep turning it.
Because you've got really high stamp duty costs. Buyers at auction have become a lot more discerning. I think it's a lot harder to trade on properties through auction these days than it was, because I think buyers are just becoming more savvy. They're kind of seeing what you paid for it when you bought it, and thinking, well, I'm not going to pay 20, 30 on top of that, unless there's an angle that they've seen that perhaps you haven't. I think it's quite tricky, but we have traded a few properties this year. And they're great because they help build up the cash pot and things like that. But we've been retaining quite a lot of the properties that we've taken on over the last year or two, really.
Do you ever because becoming a landlord goes back to where you started? You don't mind being a landlord. Some people loathe it, and that's why I think they're like the proper traders that. When I say proper traders, like the ones that literally don't want to hold anything, they're just like literally turning over stock. And they're putting like 30, 40 properties through an auction. They really they just don't like being a landlord. They don't like tenant issues.
I get that. It's I'm just used to being a landlord, I guess.
What about HMO stuff? Do you do HMO stuff?
No, I haven't done it. We did a semi HMO with that place in London. So we moved out of there, and then we followed all the regulations and things like that, and did it. But it was just a bit of a nightmare managing it all, like the people that were living in it weren't very respectful, and
the HMOs, I've got a bunch of them, and I just don't enjoy managing them anymore.
Whereabouts are they?
Mainly got East London, Medway, Kent, Coventry in the West Midlands, and up in the North East.
Yeah, I mean, I wouldn't rule it out again because the cash flow is great with them,
Cash flow was great, but then the interest rates went up, and then the utility bills went up, and everything got squeezed. Rent started creeping up a little bit, but we have been squeezed. Any HMO investor watching this right now is probably thinking, it was great.
Really?
And hopefully it'll catch up, but it goes back to what we were talking about rents back when, 2008, 2010, 2012, the affordability, like tenants can't right now afford to pay much more. And during COVID, the rents did go up significantly. That was really good. High inflation, high in rent, but it's tapered off somewhat.
I mean, if you could, I just think it's quite hard to find those deals in London and the Southeast where you could buy a property that's good value in a good location and do like a kind of high-end HMO. Where you've kind of got that demographic, which is kind of the people that are kind of on the verge of maybe buying their own place or moving into their own flat, perhaps in their early 20s. That kind of demographic would be great to find properties like that, but it's a struggle.
What about commercial property, industrial? Like if you get an industrial unit, do you do any kind of property type?
We've done one recently. We bought a property up in Derbyshire, which is it's a house, but then it's got a plot of land at the side. Which we're getting planning for 2 semis, and then at the back of it there is a commercial warehouse, and we've just got change of use to turn that into a B1. So that's our kind of first foray into commercial really. But we've mainly been residential, but we're really open-minded to commercial. I think there's a lot of opportunities there.
There's a lot of opportunity. I love commercial at the moment. I keep talking about it. I need to do something about it. I promised myself this year and next year I won't buy anything, but I'm like literally itching to get something commercial. I drove past 3 places today on roads that I normally go past and stuff for sale signs, and I'm like, right, I'm adamant I'm going to actually go and tap them up.
It's just finding the angles, right, and finding what's actually going to work, and making sure that you're going to get a long-term tenant in there. And
I think like when you're so I was having this conversation with the previous person I was speaking to today, and the way that you vet a residential tenant, you check their previous landlord experience, previous current employer experience, reference. And then you've got 3 months bank statement. You do a credit reference check on them. Like there's ways that you can make sure that they're going to be look at the multiple of how much they're earning versus how much they're going to be paying rent.
It's a bit more. Seems a bit more straightforward.
It seemed a bit straightforward, but I think if you're a business guy, as you are, you could probably look at someone's business plan and go, right, what's your profit and loss projections? Have you done this kind of industry before? Is there any other how long you been in business? And then you can make a kind of informed decision as to whether these guys are chances or not, or whether they
kind of forecast as well and think, okay, is this business recession proof?
Exactly. You can have it. I think that you got to look at it like that. How much is your marketing budget for because it's all well and good that you're going to spend 50 grand on the kit out and it's all going to look singing and dancing, but if you've got 0 in your P&L for marketing, you're not going to get any customers. So I think all of that.
There's a logic behind it.
There's a logic behind it. I think that I really like the sound of.
And it's less competition as well. I mean.
Relatively, and the stamp duty savings,
that's a big one. So I mean, in our industry, the quick cash sale industry, I was talking about James being involved with a quick sale. They were the first kind of BMV company, or buying properties below market value, offering cash that kind of thing. Now it's swamped. You go into Google and it's just so many of us out there, and I think it's quite easy to set yourself up as a quick cash sale operator. I mean, it's changing a bit now because people are realizing how much hard work it is. But it's reasonably easy to set yourself up, set up a Google Ads account and get going, So commercial is like the area that's a little bit, it's less kind of bloody.
Right. So back in the day, you used to get a lot of deals from estate agents. They used to know which properties are coming up at a reasonable price. Nowadays, you can't do that so much because you've got sold house prices online and everything. Yeah. It's a little bit more challenging. But I think the commercial real estate with the estate agents or commercial agents, I think you can still find some good quality deals.
Yeah.
But it is a slightly different discipline. You do need to know how to navigate it. But anyway, so if you come up with them, I think that well, definitely have a look at that sort of thing.
Yeah.
In terms of valuations,
because
that's a large part of getting it right or very wrong. Have you ever got it wrong?
Oh yeah. I mean, we've managed to kind of ride out the storm when we've got the valuations wrong. It's not necessarily that we value the property incorrectly. What we've sometimes underestimated is the extent of the refurb and the extent of the problems that come once you purchase the property. Because you're buying these houses fast, you often don't have the time to kind of do that kind of physical due diligence that you would when you're buying a normal home.
Sure.
So, I mean, overall it's been fine, but there have been a couple of what we call lemons where you kind of, you buy them and you're like, okay, we didn't realize that was going to happen. And there's like a whole hornet's nest of issues that crop up, but I think that happens in property, and I don't think
in buy from business, right? Some shit happens.
yeah exactly. So I can't remember who said it, but I think most people who've been doing property for a while have bought some real duds, and I think it's just part of the process.
Something that you've lost money on. I think it's impossible. The more active you are to have a perfect record. The wisdom again on that side of things, I think, is you just gotta make sure you have more wins than you've had losses.
That's it, and just keep going. I mean, with the ones that we've haven't gone to plan, we've ended up keeping them, and just kind of thought, right, we'll just ride the wave of capital gains when they eventually come. At the moment, there hasn't been that much, but they're renting well. We're getting good cash flow, so over time and
interest rates will continue to dip. I'm kind of liking buying. Anyone buying right now, because I think that if you can make it work on the cash flow now, as interest rates start to dip, rents are not going to suddenly come down in any way. So you're going to suddenly have that good profit margin again.
I think rents are. I mean, it's hard to know exactly what's going to happen, but I think with more landlords exiting the market, there's a good chance that rents could go up again. I mean, who knows?
Well, they say rent is always inflation linked, and inflation is always generally positive. It's always going to be the target is always 2% anyway. So it's always should be rising ever so slightly. Over time. So I think that's why I like property generally over a long period, and capital growth is great when you get it, and it's probably made more money for me and my family over the years, rather than all the running around trying to add value here and there. Just sitting on something in London, for example, has gone 5-6 times, exactly, probably like the one you got in Northwest London. But I always see that as a bonus. I think the more fundamental thing is to make sure that you can keep up with the repayments,
ride out the storms.
So you don't end up becoming a customer.
That's right. I think as well, you've got to make sure that you prepare for every eventuality. You don't know. I mean, I'm never one of these people that can kind of predict a crash coming, but there will be a crash. There will be a crash. Don't know when.
Inevitable as the sun rising each day, the rain, come in.
And you try and think to yourself, okay, if it does happen, what would I do?
Exactly.
And that was when I first started. I didn't really know I didn't really think about stress testing and stuff like that. It was actually, he used to run an event, John Corey. I remember going to an event. He was around quite a few years back, and he was talking about stress testing at that time as well. So then I started thinking a bit more about okay, what would happen if this were to happen, if that were to happen? It all comes down to gearing, like we were talking about before. I think that the more lowly you geared, the better, really.
Absolutely, generally. So I mean, talking about gearing and stuff, in terms of the acquisitions, just think about John Corey. I speak to him still regularly.
Oh, he's in the US, right?
He's US. I mean, he kind of dots around from London to US, but he is spending more time there as well.
Right.
Very good guy.
Yeah.
But anyway, talking about the gearing, the cash or finance, do you do everything cash, or do you use like facilities that you've got with investors or bridging lenders, that kind of thing?
Yeah. So we're always buying cash, like at the front side of things, because we're cash buyers and we're a cash buying company. So, sellers come up to us and they want a fast solution. Even bridging, there can be delays with it.
Yeah.
So we don't want to put that risk on ourselves, because A, we could lose the deal, and B, we made a promise to the vendor. So when we say we'll buy. What we sometimes do, or increasingly do, is sometimes buy the property and then get bridging afterwards, after we bought it.
Yeah, to recapitalize.
Yeah, to recapitalize. But on the front side of things, we're buying with cash. So then, if we're trading, we just want to try and get out of that bridge as quickly as possible.
Yeah, of course.
To avoid the ongoing costs and the arrangement fees and all that kind of stuff. If we're renting, we've just got to play the game, really. And refinancing is just such a nightmare at the moment. It's just taking so long for everything.
Yeah. So, I used to complain a lot about solicitors, but recently it's been valuers actually been doing my head in.
Yeah, they're not the best. They get the valuation, and then you're kind of waiting for sometimes 2 weeks to get the actual result back.
I've had it 21 working days.
Yeah, that's not right. That shouldn't be happening this day and age.
So what the hell's going on? Yeah, yeah, exactly. No, it's very, very painful. And then they still send it a few days later as well. And then usually it's downvalued, so then it needs to be contested.
Yeah,
just like pain.
Yeah.
A lot of pain.
What we were doing was buying them, even though we were going to do a refurb. We were like, look, we'll just get a lower valuation just to get it through. And then refurbing it, and then hopefully by the time the refurb's done, we're actually, okay, we're not getting the full valuation of the property, but it's bringing our gearing down anyway. So we're all right, we'll just do it, just to avoid this headache of dealing with lenders all the time.
Yeah, no, that makes sense. And then do you have, talking about the process and valuers and stuff, and lenders, solicitors, do you always get searches, or do you kind of get search indemnity?
Search indemnity usually, yeah. Because the time frames. I mean, most searches can come through within a few days, but it's just the local authority one. That one's just,
they take weeks.
I don't know why that's still a thing,
But I remember Hackney was always something like 6 to 8 weeks or something.
Yeah, so usually we got indemnity for that, but most of them come through pretty quickly. If we're trading on an auction, we've learned to provide as much information as possible and be transparent, full legal pack and stuff like that. And we've already done that when we bought the property anyway. So, we would try and get searches done for that, but the local authority search is pretty much impossible to get within. If you're lucky, you'll get it in a month.
And to do the valuations, do you do them all just desktop yourselves? Do you get valuers and surveyors involved?
Generally we do desktop valuations. So our process is that we would speak to the vendor. If they are interested in a quick cash sale, we would say, okay, this is roughly what we're looking at. So usually we'll be able to see photos online.
Yeah.
We've got access to, if it's already on with an estate agent, that makes our lives a lot easier because the photos are fairly recent. But if it isn't, maybe they'd be renting the property out. So we can go on Rightmove Plus, which is, has got all the property listings dating back to 1995. So you can really see the history there. So that's a great resource for us. We give a desktop valuation, and it's based on our own experience. So usually my colleagues will have a look and say, look, I think it's worth around this. Myself or James will have a look and say, yeah, probably a bit lower, but we can have a look. So then we would usually go out. London, Southeast, I tend to go out and have a look myself.
So you always see the properties, you don't do unseen?
Yeah, we usually we might do it through a video call.
Okay.
It is risky because there's often latent issues that you might not see. And that's just the game with quick cash sales. You just have to play it and take a bit of a gamble with some of these properties. Like that property I mentioned, we didn't see that that we needed to put structural beams and all this kind of stuff. There was issues with surrounding property. There was a negative easement on the side. There was a cornucopia of issues. It's just a case of seeing the property, making the offer, and sticking to that offer as well. One of the big issues in the quick cash sale industry is that there's a lot of companies who are going out there making offers saying that they're going to stick with that price, and then as the conveyancing process goes on, they're chipping away
at the end.
And we just don't think that's right. You know, we're just like, look, our offer is our offer, and even if we're getting to the point of exchange completion, we feel like we might be overpaying for this, we'll just go ahead anyway. It's not really happening because we've got the experience now to know like what's a good deal and what's a bad deal, but.
Reputational risk is a big one.
Yeah, it is, and we don't want a negative review that we've got the price. There have been
or one negative review, and it'll lose trust in the next person. Going, they're going to drag me out. I need the money in a week or so, and they're saying they can do it, and then this guy said it didn't happen.
Yeah, it's not great. I mean, there have been issues that have been flagged to us during the conveyancing process that the seller didn't tell us about. That's slightly different because the seller hasn't been fully transparent, about the whole situation.
Do you get them to like fill out a form, or do you do it over the phone, or is there any kind of process like that?
Not really. It's more kind of our word is our bond kind of thing. We're not really we're not. Any seller that like has works with us, they know that we're going to complete.
I guess you can just ask them, look, is there anything that we need to know about that might have changed the nature of this?
Yeah.
And then if they say no, it is what you say, and then something comes up, it's like you should have known about it.
Yeah. And what's happening now as well is, because there's quite a few of these quick cash sale companies, you're almost getting into a bit of an auction with them. So a lot of people are making offers on the same properties because people are getting a bit more savvy and saying, well, I'm going to call about 3 or 4 different cash companies and get offers, see who offers the most. But what we always say to them is that what's going to happen is we're going to make our offer. It'll probably come in lower. But then as the transaction goes on, you're probably going to end up selling for the same price that we offered anyway. And we've actually had a lady that we dealt with recently who ended up going with a competitor, but then ended up getting offered lower than what we did.
Ouch.
So we see that like quite regularly in our industry. And the quick cash sale industry is relatively nascent. It's only been around probably like 25 years. So I feel like we've established ourselves quite well as kind of honest operators, and I feel like we wouldn't want to kind of tarnish that reputation.
Good. Is there a standard like margin that you work off? Because the famous 25% is the 75% LTV, and that means you can get onto a term loan at the end.
Yeah.
Is there a set margin that you're always working towards, or is it deal by deal?
Yeah, it tends to be around 75 to 75% of the market value, but it depends. I mean, London we might be willing to offer more in the southeast because we kind of see that there's opportunity to add value. Or that kind of thing, So it does depend on the property, but generally that's where we're buying at. Yeah. For auction, at the moment, we're suggesting pricing around 85 to 90% of the market value. Yeah.
And then
no
auctions
fees as well with the cash sale. So there's no estate agency fees as they're covering.
So what the offer that they get, you give them, that's what they get.
Yeah, and we'll pay their legal fees as well.
Got it. That makes sense. That's very good.
Yeah.
And then so the auction option, how did that come about?
So it came on back of like a lot of the conversations we were having with vendors. Really, we would make a cash sale offer at that 75% or 70% market value. They would say, "Look, it's too low. I can't do that." And we'll say, "Well, why don't we put it through our auction?" There are a few downsides. People who want a discreet sale are not going to get that with auction. But the plus side, we're creating a competitive bidding environment for people to be able to maximize the price they get and still get the level of security that you would get from a cash sale. It just means that you're gonna have to put your property out there. And you're
gonna have to wait maybe 4 weeks to get it listed, 4 weeks to get it sold.
We're able to turn around auction properties as long as the legal pack's done. We can get them listed in about a week because we don't have auction days. We just launch the property and then we give it a 3-week time frame, the last 6 days of which we open up the auction. So, we don't have like that kind of time.
You don't have to wait till, the auction day is going to be that day.
Yeah. I mean, that has its advantages because it helps auctioneers build up a bit of momentum.
Yeah.
But at the same time, we've got some really good marketing channels. Not only do we do Rightmove and Zoopla and like the kind of normal portals, we've got our own databases and things like that. Right. So we're able to get these properties out there quickly, And we also have worked with investors as well. So we say, look, we've got this coming up. What do you think?
Exactly.
So we're able to kind of get these properties turned around quite quickly.
Very good. And with the auctions, because I was going to ask you about, because there's always this cycle that the normal auction, and they always say it's like a roller coaster. As soon as one finishes, you got to build up for the next one. Right. You just kind of completely eliminated that. So what's the difference between, for those who don't know, a traditional auction And is it a modern method of auction? Is that what you're doing?
Yeah, yeah, we do both. So, I mean, the majority of our auction business is traditional, but the modern method of auction is it's kind of appeared since I think probably since around the financial crash.
Yeah.
I think the first people that were doing it were I Am Sold, and they partner with estate agents. So a lot of estate agents who are struggling to sell properties will say to their clients, okay, well, we will put your property up at auction through the I Am Sold platform. There'll be no fees to the seller. So the seller thinks, okay, I'm getting a great deal here. But the downside is that the buyer gets charged like 5% or something like that, or £5,000 minimum or something like that. So sellers don't realise that that's going to affect what people are willing to bid on the property.
They effectively pay for it at the end.
Yeah, exactly. So that's the kind of incentive that it reel you in with like no fees, but it's kind of a false promise really. So the way we do it is we kind of run it in a similar way to the traditional auction, in that we just market the property over the same period, 3 weeks. Last 6 days we open up the auction. Difference between that and a traditional auction is that when the hammer falls, with a traditional auction, you exchange contracts, you have to pay a 10% deposit, you've got 28 days to complete. With the modern method auction, you still have to pay our buyer's fee, as you do with a traditional auction, but you have another 28 days to exchange contracts and then a further 28 days to complete on the sale. So it gives you a bit more time to organise your finance and things like that. And it also means that the offers that you get are likely to be a bit higher than traditional auction. So that's why people like it. The downside is that as we were talking about earlier with finance, often it comes down to it that the finance isn't organised in time for the 28 days for the exchange to happen, and the seller's not going to really be like, okay, well I'm going to pull out of this sale because they've already agreed to sell because they need to sell. So we do have those issues, and most listers will tell you those modern method contracts aren't that watertight. And there's means and ways around it. So if whenever I'm advising someone on whether to go for a modern method or traditional, I say, look, traditional is going to be a lot more secure for you. Not a lot more secure, but because I mean, we haven't had a fall through with a modern method auction. It's just that the period could go on for a bit longer. Shorter than the estate agency sale and more guaranteed than the estate agency sale, but you've got to be prepared for a little bit of wiggle room there.
I've heard some people recently been saying that actually modern method of auction has been really good for us to find deals, because some people some buyers are kind of just put off by the whole process. They're like, it's neither here nor there, and I think that people for some reason it may have a negative stigma attached to it. So just less people are kind of less people are inclined to kind of go down that route. So they found that less competition for it. So they've actually kind of enjoyed buying from that. Not necessarily best for the seller, but better for the buyer. So
if you go onto EIG, you see a lot of stock there nowadays.
Oh, is it?
So
sitting around there, maybe there's a deal to be done with somebody.
Yeah, for sure.
I guess. You've been very, 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 very transparent and very helpful, I think, in shedding a light on what the property traders world looks like and what the kind of stuff that you've gone through. So just a quick fire questions. What is the best piece of advice you've ever received?
God, I would say, in property terms, I would say probably not to get too emotionally attached to properties. And sometimes just cut your losses. There's been a few deals where I've kind of thought, you put so much effort into them, you've refurbed them, and they hasn't turned out how you wanted it to, but you're so like, oh, I did that, I put so much effort into like doing the kitchen up and stuff like that, and like I just wish it could work out a little bit better, but it's not. And then you end up keeping these properties for a lot longer. It
gets worse and worse and worse.
Where you could just cash in and just move on with your life and probably do better deals. That's what's
make up for it, isn't it?
Yeah. So I think, as I said before, when I first got involved in property, my game plan was always just to build up a portfolio. But as time has gone on, it's just like you kind of get a little bit desensitized to it all. You just kind of like, look, these are just numbers, and do the numbers work? Then great. If they don't, just deal with it. Mistakes are going to be made, and I'll probably make a load more. So you just got to like be able to handle it a bit better and not get so emotionally attached to things.
What's the worst piece of advice you've ever received?
Oh God, worst piece of advice. I don't know. I'm not quite sure. Like, because I always feel like when you get a bit of advice, you can either take it on board or you can't. You just kind of think to yourself, okay, well, sometimes you make mistakes when you're young, but then you learn your lessons from it. So sometimes you get a bit of advice and you might follow it, but then if it doesn't turn out right for you, then just carry on, and just kind of like learn from the mistakes.
I always say, I ask that to like almost everybody that comes here, and I always think
Tricky one, actually.
Sometimes, because I get that reaction from time to time. Everyone pretty much remembers the best piece of advice because it's always like so many good things that they kind of like live their lives by. The worst piece of advice, I do think that those are like very positive people because they don't really dwell on the negative that much, and therefore it's a good trait. It's a good trait. You're obviously a successful property person. This is all about property people. What, in your opinion, are the characteristic traits that somebody needs to have to be successful in property?
I think you've got to enjoy it, enjoy the industry. And as I said before, I didn't really picture myself being in property when I was younger. But when I fell into it, I was kind of like, this is kind of me, because I quite like the independence. It's never like, I've always had, before I got into property, I had loads of jobs and I never had a problem with having a boss. But I think once you got into property, you're kind of like, okay, well, I can manage my own time. Even though I end up working harder,
that's classic.
You feel like you're kind of a little bit more in control of your life. I mean, I'm definitely unemployable now. So I don't think if I tried to get a job, I'd be able to get one. But I've always quite enjoyed that independence and being able to kind of structure my day. I mean, it's, I work evenings, work weekends and stuff like that, but I don't mind it. I quite enjoy working. I think you've got to actually have a bit of a passion for it, and actually enjoy it because, particularly last few years, they've been quite tough. And there have been days where I've been like, oh God, why am I doing this? But I think that's natural. I think if every day was rosy,
absolutely, yeah, wrong, exactly. Right? I sometimes think, bloody hell, why didn't I just get in a text or or I don't know. Yeah, you do have those moments, but they become moments rather than
exactly. And overall, like I'm really grateful for it all, and it's great working with James because he's one of my best friends. I've known him since I was 18, and it's great. It's been great building a business with him, and
pros and cons of working with your best friend.
I'd say it's not really affected our friendship because it's quite funny. I was telling my missus the other day, it's when I talk to James about property and business, it's almost separate to our personal conversations. So we'll speak at the weekend, just like how we did when we were like 19, 20. But then Monday morning, it's like a different conversation. It's like we're different people almost, So we've managed to kind of build things in that way. Yeah. So we separate the two,
Because you get husbands and wives and couples and stuff, and they also need to be able to find that divide as to like, look, this is where the friendship or this is where the relationship stops. This is where the business hat needs to go on, and there's no love lost in between. Yeah,
and I think we complement each other because James is got a good business mind. He's done a lot in Spain, like developing and stuff like that. Okay. So he's got a good eye for numbers, and he often sees things that I miss. Whereas I'm a bit more focused on like the kind of marketing side of things and trying to get the brand out there and stuff like that. So we complement each other quite well, I think.
Final question before I let you go.
Sure.
The property investment awards and just getting recognised for that sort of thing.
Yeah.
How did that feel, and has it helped you?
It was a bit of a blur, to be honest, because I honestly didn't think we would win it. We went along and we were kind of like just sitting there, just kind of thinking, because I've not been a big networker. I mean, I know we've met at Brendan's event, but I haven't really been networking that much. I get a lot of the information I do from like things like this, podcasts and YouTube and stuff like that. So I'm guilty of not going to much networking. So I didn't really know what was happening on that kind of side of things for a while. But yeah, it's been good. It helped us kind of get our brand out there more than anything, which has been really useful. I think that was the main kind of benefit from it all. Often with networking events, you're getting investors at them, whereas our target market is more sellers. So what I'm trying to do is trying to get out there into the kind of sellers market world, work with receivers, administrators, housing associations and things like that. So that's my goal really moving forward, to try and get into those kind of those spaces.
I said it was going to be the last question. I do have one more. Have you incorporated any kind of tech into finding deals in distress? There's a guy called Toby from Aparo or something. He's built some algorithm or something where he's finding distress using.
I've heard of that. The challenge is that I think distress sales finding people who may be behind with their mortgage is quite tricky, I think. Whereas with businesses, it's a lot easier. So, you know, you can go into company's house, download their files, you know, go to the insolvency records and see that kind of thing. But with residential, I think it's a little bit trickier.
Right, yeah.
But,
That
you
makes
know,
sense.
there might be landlords out there that, you know, we could target, you know, who, you know, perhaps they're getting a bit older, they're looking to, like, you know, downsize their portfolios and that kind of thing. So we have been using AI more for, well, AI is changing kind of how we generate a lot of our leads. So we do a lot of SEO work, so search engine optimization. That's been a kind of a long-term plan. We've been doing that since around 2017. And that space is changing quite a lot at the moment because more people are going onto ChatGPT. Google is launching like AI mode and things like that. So all of that is shifting. So we're trying to stay on top of that, and it's constantly changing, you know. So we're kind of exploring kind of AI models within that space. Also, we use AI for lead qualification. So we've built up a lot of content on our website. So we get people just contacting us for whatever reason. So we're trying to filter out the kind of people that we could actually have a proper conversation with, you know. We get people contacting us asking about stamp duty or something like that, and we're just like, look, just go to this part of the website or contact an accountant. We won't be able to help with that kind of thing.
We're property solvers, but we can't solve legit.
Yeah, we're not tax people.
Exactly.
Yeah, so...
Ruben, you've been fantastic. I could talk to you all day about this stuff. I hope that actually at some point you would come back and we can dive a little bit more into deals and different kind of like some horror stories and some success stories and stuff.
Yeah, definitely.
Thank you so much. If anybody wanted to reach out and find you, what's the best way for them to find you?
Best on LinkedIn. Just Ruban Selvanayagam. There's only one as far as I know. Or Ruben at propertysolvers.co.uk. More than happy to have a chat.
And we'll make sure that all the links are in the show notes.
Brilliant. Thanks so much.
Thank you.